stress up the groove, the energy a little different when the blessings are good. Hey, who you talking to? Just know I ain't no regular fool. Could be.
Good morning, everybody. It is Thursday, May the 6th. Gold's rocking. That's exciting. Been lots of news going on. I'm hearing Nate over at Hindenburg just put out a big short report. Maybe get into that later in the show. Today we got an exciting guest, James McInnes from Globally Local, a plant-based vegan deal that's recently gone public. We had a whole bunch of people reach out to us about this name, so we said, you know what, let's reach out to James, see if he'll come on the show. He's a good sport. He's going to come on. We're going to talk to him about his deal. Lots of fun stuff going on. Buckle up. We're about to get started. James McInnes, thanks so much for joining us today.
Thanks so much for having me on.
So I got to say, there's been a whole bunch of these vegan plant-based deals have gone public here in Canada over the last, year. We first saw Else Nutrition. They went public with a relatively small revenue base, a little tiny penny stock that everybody kind of scoffed at, that to date has commanded a heck of a valuation. And is everybody frozen? No? Okay. Sorry, I thought my computer froze there. So Else Nutrition comes along. They're doing tremendously well. And then there's a whole flurry of these deals go public. Most of them are these companies where when we actually do a little of a background check into them, nobody's even heard of them. Then recently, you guys go public. We had never even heard of you before. And suddenly all these people that are in our network that live that sort of plant-based diet or vegan diet, whatever you prefer to call it, they're all reaching out to us. One of my best friends, Pete, who loves you guys, he reaches out to me and asks about the stock, and that's kind of when my radar goes off and goes, okay, this has got to be an interesting story. We got to learn more about this. So what can you tell us? What's the background? What's the history? How did Globally Local come to be?
Well, I mean, we started as actually a organic produce company. So we started out really as like a grassroots vegan organization where we were really just trying to get people access to like affordable food and good quality food. And we actually kind of got into fast food when we went to RibFest 2016. So we basically brought a plant-based version of a Big Mac to London RibFest, and we sold out. So it was really crazy thing that happened there, and we got like a lot of like publicity from that because it was just considered so outrageous that a vegan company would go to a RibFest and sell out. So that's kind of how we got first started into the fast food business.
Okay, so you guys have an actual drive-through location, I'm told, in London, Ontario, which is kind of unique. The first one in Canada that's an all sort of plant-based or apologies. I know people get a little bit caught up in the words that we use here. I don't know if you refer to it as vegan or plant-based, but the first drive-through of plant-based foods only in Canada is that a true statement?
Well, we did have one actually. We closed it last May, just around the start of the pandemic, because we were really transitioning to a much different model, what we call our smart kitchens now, which are like really compact smart kitchens, which are like focused on delivery and takeout business. So we actually kind of slightly shifted our model a little bit to focus on that. And so right now we're in Toronto and Windsor. We're just moving our location in London actually to a new spot, which is a new build that is currently under construction. So yeah, but yeah, we did do that in 2017.
Okay. So let's get get into the menu here for a second. This is from the slide. I suppose I could pull it up from the website as well. But so you guys sort of have, you got the Whopper, the famous burger, which is I don't know if there's branding issues there. Someone told me that it used to be called the was it the Big McInnes?
Yeah, the Big McInnes. Yeah, we were. I mean, we still are really like kind of like, you know, scrappy and controversial, I guess, and you know, really sort of like poking the bear, so to speak. But when we first launched at Redfast, we called it the Big McInnes, and McDonald's didn't like that too much, so they issued us a cease and desist letter. So we changed it to the famous burger, which is what it's called now.
Go ahead, Jay.
I was just gonna say, so you've had issues with McDonald's, but nothing from Burger King with the Whopper?
Not yet.
It might come now that you're public, but
so far so good. Yeah, no, not yet. They haven't had an issue with that.
So you mentioned that you're transitioning to a smart kitchen type model. Is that effectively a different way of saying a ghost kitchen model, where it's not dine in, it's just delivery based on an app type thing, or what's the strategy there?
Well, a smart kitchen is something really we kind of created and coined, I guess. It's not really a ghost kitchen because we still have like limited seating, but the idea is really like we use really advanced cooking equipment and automation technology to really speed up service, provide like more consistent food. So it's more the way we kind of cook food and prepare it for customers that I think is really unique. Obviously, though, like we're compact, we're small, we're lean. That is similar to ghost kitchens, obviously. So I think it's a similar concept, but not exactly the same.
So your London store here looks like it's actually doing quite well. Over $350,000 revenue from July to September in one quarter. So that's over $1 million revenue run rate. What's the growth looked like since inception? Like, are you guys still finding same store sales growth?
Yeah, like right now, really our Toronto location is like our model location that we're building our future locations from. So that's where we kind of like, we developed the smart kitchen in London, but we kind of launched the full concept in our Toronto location. And we've had huge success in Toronto, which, as you know, it's a really tough market to succeed in, a lot of competition. So we are seeing definitely like growth. Like we had a fantastic month last month. And we are seeing really strong sales still, even during the pandemic. So it's we're kind of taking that model and we're just expanding to all sorts of different cities now.
It's interesting to me just having, you know, friends who are I guess we say vegans. They often complain to me that it's hard to find convenience. I mean, they try not to complain because it's a psychological thing, but I know that it is hard for them. And then a lot of the vegan sort of restaurants that do exist often or plant-based, often are sort of more health conscious, sort of, you know, salads and cafes. So it seems like you guys are kind of breaking the mold. Are there any chains like this in the US right now that are sort of breaking out? I've heard of one called Amy's in California. What's your sort of global look at companies that are sort of doing things similar to what you're doing right now, focusing more on that fast food sort of segment?
Yeah, I would say probably the biggest one in the States is Plant Power Fast Food.
Okay.
I think they have like 7 or 8 locations right now. So they're probably like the closest to what we're doing in that, like, it's really kind of traditional fast food fare where the food is kind of like indulgent. And you know, the price points are similar to other fast food chains. So I would say, but you know, really, like, largely the market is untouched, I would say, in the States and Canada, and that's kind of something we're obviously looking to change.
Okay, so here's something really interesting on your deck. We pull up the expansion strategy. You guys are looking at kind of going all over the U.S., which is not focusing on one particular region, but from coast to coast, north and south. What's the strategy to open these locations? Are you guys looking for a franchise model or sort of a corporate owned model?
We actually are doing a combination of both. We're doing corporate stores and franchises. Corporate stores are great because we can kind of set that. We can set the model, the example, where we kind of show people this is how it's supposed to run, this is how it operates, and also it lets us go into those really high high target areas for us, and our preference is to open corporate stores in areas where we can open a bunch of locations. But that being said, as we kind of develop our management structure, the franchises are a great way of sort of like, putting a location 2,000 kilometers away, and you have a franchisee that's on the ground operating for you. So I think at the end of the day, we're definitely doing a combined approach. I think that's the right thing to do, and it's actually something that many other chains do as well.
What's the typical capex that's required if you guys wanted to go open up a corporate store? Let's first talk about Ontario here. I just moved out to the Durham region. I'm living in Ajax now after living in the city. I said, okay, COVID, I need more space. I can't do this anymore. Like a lot of people. Let's say that you guys decided, okay, there's a location in Ajax we like. What's the typical capex if you find a location let's assume that you're able to rent to have a store up and running?
Like the cost for getting a location going, including build up, is around $400K. So that would be including your equipment and the the build out costs, and that's looking at around 1,000 square foot unit. And rents will typically be our target rent is around 4,000 gross a month. So again, we're kind of getting spots that are in great locations. So typically, like, the rent per square foot is pretty high, but because we're renting such small units, we sort of get we get a big return from that rental income. So for us, we're really focused on getting into great areas with strong co-tenants and that kind of stuff.
So I want to go down that avenue that Steve kind of pulled up there, just in terms of CapEx. With you guys doing the whole smart model and a lot of automation, does that result in significant expenditures relative to your peers? And how's that pay off? Are you able to have a significantly smaller kitchen staff, or what specifically is being automated?
Well, I mean, for example, like we don't have a cashier. For example, it's all self-checkout. So we're cashless. That's one thing. We don't have a traditional grill, so there's no like person that's sitting at a grill. So we use these like really like high tech convection ovens that like cook our food in like a minute. So so you kind of look at those types of technologies that we're using, and it's all kind of like push button and really simple. So we can operate our store with like as little as one staff.
Wow.
So
wow,
you can have a staff churn out like hundreds of dollars of food an hour just with one person, which is pretty incredible. So, and again, kind of what we're doing, and I think this is really what is really interesting, is that we are continuing to develop a lot of proprietary automation technology, which is really kind of my background. More like I'm a software person by like education. And I ran a software company for 7 years prior to this company. So I have a lot of like knowledge and experience on automation technology, building those kind of teams. So I obviously can't tell you anything specific, but we're working on some really revolutionary stuff that's coming out that's going to be game changing for the fast food industry.
How disruptive do you think ghost kitchens? Because we're starting to see a few deals go public here in Canada, and I know that there's a couple names that are raising a lot of money down in the US. Do you think that we're going to see these ghost kitchens and cloud kitchens become like a real thing in like 5 to 10 years, where people are generally buying food and having it delivered at a much higher frequency than today? And then secondarily, we see far less sit down restaurants. Is that kind of where you think we're going?
I think so. I believe so. I think the pandemic really kind of changed the restaurant industry from being sort of on the verge of sort of like dabbling into kind of delivery and takeout, to being like, if you're not doing delivery and takeout, you're just dead. you know. So I think those buying behaviors aren't going to change anytime soon. And in fact, I think it's just going to increase. Like, we're certainly betting on that, you know, delivery and takeout is going to be more and more prevalent. But, you know, that being said, you can still come into our restaurant. You know, I think there is still a place to have that, you know, experience where people can come in and, you know, talk to a staff member and ask some questions and, you know, kind of get a feeling for that vibe. I think there is still a place for that. I just, but I think at the end of the day, you know, you know, I think the delivery is going to be the main, you know, the main business going forward.
So let's talk about margins for a second here. So I'm looking at this menu here that you guys have listed on your deck. This is very cost.
Wow.
It's low cost food. Like, I mean, you know, you guys are doing a combo for $11.99. The Whopper, you can get a combo for, does that say $8? A sandwich for $4 and $3.99. This is very
this is like better than McDonald's at where I'm at.
Jay's in Saskatchewan. So what does the margins look like on food at this price?
Well, for us, the margins are good. You know, we're still seeing like 10 to 15%, you know, margin after like on our operations, which is you know, on a per store level, which is you know, pretty decent at our price point. But, you know, really, like, our goal is to be cheaper than, you know, traditional fast food. We want to be cheaper. We think that this is how you really disrupt the industry, is that you come in with an offering that's cheaper. It's better for you, better for the planet, better for animals, and still tastes amazing and offers better value. Like, in other words, you're going to get more full. So I think if we can do this, and the way that we can do this is that because we manufacture all of our own food, we make the food, so that means we control the whole supply chain. We're not going and, you know, buying Beyond Burgers or Impossible Burgers. You know, we make that stuff ourselves, and because we do that, and as we scale the operations, we are able to kind of pass those savings onto our customers, right? Because those profit margins are internal to us. So I think that's why we're able to do this, and I think that's why we're going to disrupt the industry. It's really, in my opinion, based on price. Price is just everything. You know, selling a burger for $1 less than McDonald's or Burger King is very disruptive.
So I guess my question is, and I truly mean no offense by this, is it healthy?
So what we call it is we call it healthier. So I'm not going to sit here and say like we're, you know, low fat or like we're low sodium, but, you know, we don't have any cholesterol. It's higher in fiber. Our food is made from like whole food, plant-based ingredients. So for example, our burgers are made from chickpeas. So we basically try to stay away from, you know, the protein isolates and really heavily processed plant-based ingredients. So you're getting a much more natural food experience at our restaurant because we choose to use those high quality, low processed ingredients. And I think that connects with people, especially people that are not vegan, because, you know, I think a big criticism in the plant-based sector is, you know, well, I mean, if we're eating a plant-based burger that is highly processed, is it better than meat? You know, is there any health benefits of that? And I think that's a question a lot of people have, and you know, it's a valid concern. So again, this is why we take a lot of pride in making our own food.
Yeah, I mean, I'll be clear. I don't go fast food because it's healthy. I know McDonald's is more filler than real food product by all means, but you see plant-based, so I had to ask. And I mean, to me, that's a fair answer.
Yeah, and I think the key though there is like you kind of find a balance between indulgence and health, right? And I think people want that. It's kind of like I can have my fast food fix, but with a little bit less guilt than if I went to a traditional restaurant. I think if you can make people feel good about eating fast food again, which is I think what we do. I think people can eat our food and feel good that they made a better decision. You know, I'm not saying that it's better than eating like a salad or a smoothie or something, but it's a better decision. But you still get those cravings satisfied. It's kind of like a win-win, you know. And I think that's kind of like the sweet spot that we're in.
So you're I've never been to a store, so forgive me, but so your burgers are made in like a sort of like you refer to it as a convection. I forget how to pronounce the word. Is it convection
commissary?
oven? A convection oven?
Yeah. You mean at our actual restaurants? Yeah.
Yeah.
Exactly.
Now, what about the fries? Are those made in in an actual deep fryer, or are those also made in an oven?
Deep fryer.
Okay.
Yeah.
That's
So
gonna be a sticking point for me. I'm happy to hear that.
No. We are all about deep frying.
Okay.
So yeah, again, you can't get that same taste unless you deep fry it, right? So it's really important to have that deep fryer going. So
okay, I'm all pumped up here. I eat too much fast food. The weird thing about since I moved out to the suburbs, it's like you can't drive 30 seconds without driving past the drive-through.
Yeah, for sure. Yeah.
So why'd you decide to go public?
Primarily, honestly, it was a way for us to really drive our growth. We really didn't want to bring in like VCs or like any of those kind of organizations. I think those are really toxic they can be really toxic to a company. And we really felt like so many people are asking us like, hey, we want to support you guys. We want to invest. How do we do this? And we had so many people that have been really excited to join us in this movement. And going public, gives people that opportunity to support us financially, and it gives us the chance to raise capital without bringing in sort of external forces, and we can still really kind of control the company and make sure that the vision is executed and that we're doing things for the right reasons. So yeah, I mean that's why we did it.
So what can you tell us about your investor base? Who's the largest shareholder?
Myself, and my wife.
Okay, so that's good. I like that.
We own over 50% of the stock.
Okay.
So yeah, and then our next biggest is it's a friend of mine who actually I went to high school with, university with, and he has a small family office, and he was like our biggest investor. Okay. So between the three of us, I think we're like 65% of the shares.
Okay. Well, this is interesting. Jay, you got anything else?
No, I'll be honest. I'm not a plant-based guy. I literally just moved to an acreage so that I can raise my own animals and everything else. But I'm actually kind of excited to try this next time I'm out your way, Steve.
So am I. I'll maybe drive into the city sometime and grab some. But I really am excited about this deal. We've seen so many of these vegan deals go public, and in my opinion, not too many of them. I hear from people who are, living this lifestyle, positive things, and in this case, I have. So I wish you a ton of success, James. We're going to be rooting for you and keeping an eye on the story. And if you want to come on in the future and talk about it as you continue to execute, we'd love to have you back.
Awesome. Thanks so much. Appreciate it.
All right. Thanks, James.
Thanks, James.
All right. See ya.
That was a fun interview. I'm sincerely excited about seeing how this one plays out.
Yeah, it's a unique take. Fast food that it's like I said, you don't buy fast food to be healthy. You buy it because you need something in a jiff and you don't feel like cooking, right? So a healthier alternative is kind of interesting to me. Much like yourself, though, I'm very happy to learn that they still deep fry everything, because that's half the reason you go is for deep fried fries with 5 pounds of salt on them. But
yeah, I have a hard time wrapping my head around the valuation side. But would you hear that? The operators own a lot of it, and they have built a real business. I don't think that they're just in here to just exit. So that's
absolutely.
So what else have we got going on in the news this morning that we can talk about?
This morning in the news. Well, I mean, we can address Hindenburg. The comments, as always, are hilarious on Hindenburg's short reports. On Twitter, that is, where people instantly call for Nate to be crucified despite raising solid points. Outside of that, bunch of earnings this morning from gold producers who are just cash flowing like crazy. Gold and silver are up, which is great to see for us. Peloton's found itself in some hot water.
What happened with Peloton?
They have been forced to recall a bunch of their treadmills after that safety incident. So it looks like the regulators actually forced them to take action on it, and they issued a recall on those treadmills where the children were being basically sucked under. That was reported late yesterday with shares falling, I think 15% to close the day, which is notable considering Peloton reports earnings this evening. Analysts expecting 1.1 billion in revenues there. Outside of that, QU, a frequent talking point as of late, has onboarded Amazon as a major advertiser, which is awesome to see.
Good for them.
Cineplex reports earnings. Powerband put out their gross sales figures for April, 13.5 million, with revenues of 1.3 million, I believe it was. So I mean, there's a few stories. We can dig into whatever you like, or if you got some macro.
I'd like to pull up Nate's report here. I want to get the symbol. And what's the symbol of this company?
PCT.
PCT. Okay.
I figured you were pulling it up in the background. That's why I was riffing.
Yeah. Oh, I appreciate it. PCT, and they are on the
NASDAQ. I'll take a shot. It's one of the two.
This came out just before we came on.
Yes.
Nate, if you're watching, which I doubt you are, you should send us these in advance. Not only so we can trade them, but also so we have our titles prepared.
Pure Cycle Technologies.
Okay, give me a second here. Let me pull up my screen.
I've got the link here open. Actually, apologies. I didn't realize I had it.
Oh, here we go. Boom. Okay, so Pure Cycle, the latest zero revenue ESG SPAC charade, sponsored by the worst of Wall Street. Hey, I thought I was the worst of Wall Street.
Bay Street. You're on Bay Street, Steve.
Oh, I'm the worst of Bay Street. Okay. So Pure Cycle is the latest zero revenue ESG themed SPAC taken public with a bold story about how it will someday revolutionize the plastics recycling industry. The company's insiders and SPAC sponsors do not seem inclined to wait to see how its claims will work out. They've collectively positioned themselves to clear approximately $90 million in cash and tradable shares before the company generates a single dime in revenue. Pure Cycle's chairman / CEO and other associated executives collectively took six companies public prior to Pure Cycle. All have failed, resulting in 2 bankruptcies, 3 delistings, and 1 acquisition after an approximate 95% decline. Over $760 million in shareholder capital was incinerated in the process. Sometimes when I read these things from Nate, I got to say, it seems like he's got to be exhausted.
He's a wordsmith. Yeah.
I love his reports, even though I know there's mixed feelings about short sellers out there. I'm a big fan.
I'm a big believer in their use in the markets, to be clear.
Yeah, we're Nate fanboys. What can I say? Pure Cycle executives have already begun to cash out, receiving $7 million in cash bonuses for simply closing the SPAC deal, and are slated to receive approximately $40 million in compensation before any revenue is generated. Pure Cycle SPAC sponsors are 2 investment banks, Roth Capital and Craig-Hallum Capital, who collectively...
Steve, before you keep reading, I'm curious if you know what Roth Capital is famous for.
Well, they are like a sort of like a second-tier investment bank in the U.S. They were all over the China hustle, if that's what you're.
That's exactly what I was headed to.
Hey, look, they even mentioned that. Roth has an odious reputation.
That's why I stopped you before you got
for
there.
Having brought numerous Chinese companies public on U.S. exchanges that later imploded after fraud allegations. Roth facilitated several of these IPOs, issued buy ratings on the companies through its research department that left public investors holding the proverbial bag. Its activities earned the bank a prominent role in the documentary, The China Hustle. Fantastic. My buddy Maj has a little cameo in it.
And actually, for those of you that follow Twitter commentary persons, Chris Irons, also known as QTR, Quoth the Raven, is featured in it.
Yeah, he worked for Geo for a while. Okay, Roth and Craig-Hallum are the only investment banks that have issued research on Pure Cycle. Both have buy ratings with targets between 45 to $48. Two partners in Craig Halem's research division received founder shares for approximately a penny per share, including the company's co-director of research. Unlike in traditional IPOs, where deal runners must observe a quiet period before commenting publicly on a new issue, Craig Halem's research department issued a buy rating the very day of PureCycle's SPAC merger, sending shares surging. Many leading plastic companies published peer-reviewed studies that detailed their advancements in the field. Contrary to that norm, we were unable to find a single peer-reviewed study in any scholarly journal citing or reviewing PureCycle's license process. We spoke with multiple competitors and industry experts who explained that PureCycle faces steep competition for high-quality feedstock and called the company's financial projections into question. We consulted with a 30-year expert on polymers with a background in advanced plastics recycling. He told us the company's patent is indirect, vague, and a regurgitation of prior art. Our expert also referred to the company's flammable pressurized process as a bomb and warned about the company forging ahead to commercial scale despite still having issues at a lab scale. In our opinion, PureCycle represents the worst qualities of SPAC boom, another quintessential example of how executives and SPAC sponsors enrich themselves while hoisting unproven technology and ridiculous financial projections onto the public markets, leaving retail investors to face the ultimate consequences. You know what I think about when I read this, Jason? I think you're on mute.
Yeah, I was on mute there, sorry. What do you think about?
I think that this deal sucks so badly that Nate couldn't find anything wrong with it because there's nothing to look into.
Yeah, I'll be honest. I'm a Nate fanboy. This one didn't have the gotcha, I don't think.
There is no gotcha because there's nothing.
There's just nothing here. Yeah. So I actually want you to scroll down because I think the best part of the report is a graphic that's just a little bit ways down.
Okay.
It's headlined Operational and Valuation Benchmarking. Right there. So the best thing you can do is right click, open in new window so you can blow it up a bit.
Let me see here. Oh no,
Just with how you are.
Yeah.
So look at what Nate has highlighted. So this is a graph from, I believe it's from the company's presentation, comparing revenue, EBITDA, and EV to EBITDA multiples. So the graph is based on 2023 estimated to 2025 estimated earnings for PureCycle compared to the 2020 to 2022 estimated for peers.
Mm-hmm.
So they aren't comparing anything directly. Two, like this company's not generating anything, and they're comparing it to people that are generating income. Like it's possibly the worst comparison I've seen for an investor day.
Now, have you looked at the chart today?
For PCT?
Yeah.
40% last I saw. 41%.
Get ready for this one here. This is great, guys. Look at this chart. This is something else. PCT's down 40%. Look at that.
That's what they call an elevator down.
Well, something that I know a lot of the short sellers that I talk with, they like to talk about when you want to run a good short, who are you up against? In this case here, whoever they were up against clearly didn't have that much strength because they all looked around at each other and said, who wants to buy and hold a bag as we try to hold up this forward against a short report? It's like, from what I could tell, it doesn't seem like that strong of a short report other than like, yeah, this isn't like a real company. This is a SPAC deal that doesn't really have anything.
And you know what? That might be enough because, I mean, if the company goes out and says they have all this tech and then someone just comes in and goes, the tech's garbage, well, maybe that's all it needs, right? I will say that the capital markets have gotten to a point in time where any steaming pile will just go with very, very few people actually stopping and going, does this make sense? Right? I'm going to point to KNR as my example, and we might get a cease and desist as a result of it because they are litigious. But last year, everyone was going, oh, this is great technology, and no one was actually stopping and going, how does it work?
Mm-hmm.
right? Like, and sometimes that's all you need is for someone to stop and go, hold on, guys, what are you buying? And then people go, oh, and they get out of this kind of headspace where they just buy because things go up.
Mm-hmm. I agree.
Right.
And we could sort of see that in this case here. This is a look. I haven't even read the report. I just read you the high level thoughts that Nate put out, and I don't see anything that like demonstrates to me that they have any like real kind of like gotcha moment, as we like to say, where there's some sort of definitive proof that this company's been outright lying. I think it's just a weak deal, and it just took somebody just to come jar it loose. And
well, I guess part of the gotcha here is Roth Capital and Craig Hallam. They backed the deal while having founders' shares in it, so I can see that being a bit of a gotcha where the analysts have seemingly crossed lines. But I don't know if that says something about PureCycle itself or if it says something about the analysts themselves.
Oh my goodness, an investment bank and sell-side analysts doing something that's a little offside. Why I never.
Who would have ever thought that? So surprised.
But hat tip to them. I know a lot of people don't like short sellers these days, and in some cases, there is like this a little bit of like some questionable tactics that go on. But if you're attacking companies that are doing things that are fraudulent, that is just like a clear-cut self-enrichment scheme. And again, I haven't looked into this. I'm not saying that happened here. I just read the highlights, but I think that there are cases where short sellers really do make sense. Let's take Sino-Forest, for example. Who knows how big that Ponzi scheme could have gotten before it ultimately popped. And it would eventually pop because the bigger these things get, the harder it is to find a new bag holder.
The greater fool.
And but they can go on and on and on. So it's the short sellers do serve a purpose. They should keep issuers honest. And I can speak of some companies that I know of here in Canada that one that I know Siggy over at Grizzly put out a report on Well Health, and like I read that and I go, he everything he's saying is accurate. And I think that this is things that people should think about. Like it's it's certainly questionable M&A. The company to date, they talk about how they have this cash flow generating model, and then like you actually like look at the operating cash flow line item and it's like all negative. So let me double check that and correct myself if I'm wrong there, but I'm pretty certain that is the case with them. And I think that it's okay for people to put out reports that say to investors, we caution you, you should think about these things, and we don't like this M&A, we don't like this deal. And at the end of the day, I mean, if Well Health is going to be a cash flow generator and they're acquiring all this M&A and they're rolling it all up to turn it into that, they're eventually going to have to show up. And if they do and they start generating cash flow, Siggy looks like a fool, or Grizzly looks like a fool. But if they don't and they continue to do M&A and continue to just be a cash burning machine, that's ultimate source of cash flow is the capital markets, it will get figured out, and it can't go on forever. So
I guess the question comes down to, why is it okay in the minds of investors for people to put out long theses but not short thesis?
I think, yeah, look, and that's a good question, because part like people call it the reverse pump and dump. This idea that you're going to put out a report and then you're going to have a big fund come in and just slam it. Like, oh, we're just going to do a bunch of naked shorting and just whack that bid so hard that it scares out retail, and then we'll cover as retail gets scared, right? But companies and issuers do that on the long side all the time, right? Like they're like, okay, we got news coming out. They've got a fund manager who has like a large position, and he just throws $1 million at the offer. Poof! All of a sudden, there's all this volume. The stock's going up. All the short-term traders hop in, and everything's working out great. So you do raise a good question, and I don't think that you are wrong. The issue becomes if some of these short reports that are trying to just spook the market, get in, get out for swing trade, and they say things that are inaccurate. And if that's the case, then when I say inaccurate, I'm not talking about opinions. I'm talking about they're actually like making up facts,
falsified facts. Yeah,
that's a problem. And you know what?
But that's a problem on the other side too, and people don't acknowledge that.
Yeah.
Right. Oh yeah, the deal just didn't work out. How many times do we hear that in small cap?
Mm-hmm. So did you say some gold companies came out with earnings today?
Oh yeah, Kirkland Lake, SSR Mining.
Did you we got
KL or SSRM?
Okay, let me pull up some of this news here. Kirkland Lake.
We provide some brief coverage on them.
We'll start with Kirkland Lake here. Okay, Jason. I gotta do this actual screen share. 1 second. Boof. There we go.
Stick with the sound effects there.
Boof. Boof. There we go.
So Kirkland Lake this morning, Q1 results, revenue of $551.8 million, cash flow of $42.7 million in free cash flow, which is quite a bit down from the last quarter. These things are cyclical, right? They're expecting the first half of the year to be the lower production half. Production is expected to scale up in Qs 3 and 4. I mean, we here's the thing with a lot of these gold earnings is we knew the previously announced production figures for the majority of them. And really what we're after here is just looking and see what the cash flows at and how much they actually generated in revenue, kind of their costs. Kirkland's doing good. I mean, I truly don't have a whole lot to say on it, but to me, it's just wild the amount of cash flow that these gold names have, and investors just don't seem to care.
They did $42 million in free cash flow for the quarter.
For the quarter.
But they did $230 million the previous quarter and $131 million last year. Sorry, you may have said it and I may have missed it because I was doing stuff in the background, which I apologize for. Why is it that they generated such
so cash flow is down this quarter off memory is because they are what was it? They're refocusing where they're producing at their mines or something. Like I think it might be lower quality feedstock that they're working with right now as they look to get to the higher quality stuff for the second half of the year. Something along those lines.
So to Chris, my producer, I know that life's hard for you with your 3 maids and 6 masseuses and 2 chefs. But if you can be so bold as to reach out to somebody, I'd love to have somebody from Kirkland Lake on the show. I'd like to know more about this. I mean, this company's got a $13 billion market cap, so we'll see if they'll come on a live stream such as SmallCapSteve.
How are they doing this morning?
Let me pull that up for you there, baby. Trading view, because it actually, out of a vacuum, the numbers you read to me are not that exciting. I have to say, it's just that's $160 million free cash flow run rate for a company with a $12 billion market cap. It doesn't really get me all, but I'm sure that there's a reason for it.
Here we go. In addition, the change from Q1 2020 also reflected an increase in mineral property additions and additions to property, plant, and equipment to $165.5 million in Q1 2021 versus 110 for the same period in 2020. Mineral property additions and additions to property, plant, and equipment in Q4 2020 totaled 188. So they're expanding operations.
Okay,
that's the quick and dirty of it.
Who else put out
SSR Mining, who is a name I kind of like to follow because they have an operating gold mine in Saskatchewan, and I believe they are the only ones.
Okay, 1 second here. I'll pull it up for you. I apologize here. I didn't get to do as much prep for today's show.
I didn't either. I was kind of running behind this morning.
A teacher at my son's daycare got nabbed with not nabbed, but unfortunately caught COVID. So my son's home, and thankfully he hasn't ran on during the middle of this live stream.
Is your wife back to work?
She's working from home because my daughter goes to a different daycare because I'm not going to get into all that.
Age issues.
But she can't go to daycare until we get negative tests. So we're waiting to get negative COVID tests until and then I've got to like beg my mom or my buddy Jay Cash, who's like the big Lebowski, to come and watch Carson during the day. Anyways, SSR Mining. So you want to take it away?
SSR Mining, quick and dirty, 366.5 million in revenue for the quarter compares to last year's 164.5 million. Net income also increased to 59.8 million while generating 77 million in free cash flow. 24 cents per share in earnings overall. All-in sustaining costs for gold production of $1,000 per gold equivalent ounce.
So that's more attractive, right? Like that's
absolutely. So SSR
like
Mining.
Sorry, go ahead.
Do you remember who they did a merger with? They merged with someone in the last year, and that
it wasn't SK Creek, was it?
No. Let me see. I remember writing on it at one point in time.
If anybody out there in YouTube land knows who SSR Mining did their merger with, please let us know in the comment section. You see the stock's having a good day here. It's up almost 10%.
Lacer Gold.
Okay. So they, from a valuation standpoint here, according to charts, I have them at a $4.7 billion market cap. They're doing about $300 million in free cash flow run rate based on one quarter, which tells me that they're trading at, just over 10 times free cash flow. In this market, what I call that is a bargain. You're actually getting cash flow for your investment dollars. And they give you a nice little dividend. What's the dividend they gave out this quarter, Jason?
I was looking for that. Raised 5 cents a share, US.
5 cents, and that's they're giving out 5 cents a quarter. Is that it?
SSR Mining also declared a quarterly cash dividend of 5 cents per share, payable on June 14th to shareholders on record as of May 17th.
Yeah, that's not that exciting.
Let's scale out a bit and see the price appreciation over the last while. So if you bought this thing at, say, $10 a share last year, 5 cents a share, it's not the worst thing in the world. That's 20 cents, so it's a decent yield. Right now it's at 1.28 at $20, so it'd be a 3% yield last year. It's not bad considering you're also getting price appreciation.
Mm-hmm. But I'm more excited about the fact that they're trading at a low cash flow multiple. That sounds all right to El Small Capitan over here. They did according to this here. They did according to my Y charts here. They did 210 million quarterly in free cash flow. That was the previous quarter. So I mean, this company's spinning out cash.
Yeah, well, they are, and I mean, I would expect them to be, as I expect any gold producer to be, just churning free cash flow, considering the appreciation we've seen in gold over the last year. Sure, we've been hovering for a couple months, but still, these mines were built based on 1,500 or less per ounce gold, and we're at 1,800. We sunk to 17 and hit the 16s briefly. Who cares? Like, it's free money at that point, right? Like, it's $200 an ounce that they're making over and above what they expected when they likely went into production or more. So I mean,
this is from Y charts here. You can see they have them over the last year, 210 million. Ooh, sorry. There we go. $210 million last quarter. That's interesting. And then you said they did what was the number this last quarter? 77 million. So in the last two quarters, they've done close to 300 million alone. And then next, let's take a look at the price of gold this morning. It's
up $30 or so earlier.
Yeah, here we go.
More importantly, let's look at the price of silver, because that's up $1, and I personally have physical, so that excites me a bit more.
Oh, there it is. Silver is up. It's having a nice little morning. Good for you. I know. I'd love to have some of the silver bugs on the show. I know that they're an interesting creature on their own.
Yeah,
But-
one every day, buddy.
Yeah, well, we'll see. It's I don't know. I watch a lot of CNBC and Bloomberg these days. Heck, I mean, if you look behind me here, I got them both on my screens right behind me. And the talk is becoming more frequently inflation. I think it's only a matter of time until we start to see commodities catch a bit of a bid, and this could be the calm before the storm. I've said that many times on gold. Eventually, it's going to have its day. And for those who follow the Canadian junior and small cap markets, I suggest that you're all going to have just a great time if you know what names to play. And as the space starts to heat up, we'll try to make sure we get lots of the real gold companies on this show and give everybody an opportunity to come on and ask questions, because it's funny. Nobody gives a shit until they do. And when they do, it's probably too late. So now's the time to be kicking tires. If you think that inflation's coming and you think that the thing that every company has resorted to as money during inflationary periods is now, real rates are the number one thing that gold is correlated with. And if inflation is going to run rampant, that means we're going to have negative real rates. That means that gold's probably going to rip. So we'll keep covering the space. It gets boring sometimes because it often feels like we're just talking about pieces of real estate that are thrown into shells with some sketchy guys as the CEOs. Not always, not all of them. But eventually it's going to have its day. And I think that time is, maybe here, look at the price. Lumber's almost $1,700.
Oh my God.
Yeah.
You know, the bright side is this looks like the classic pump and dump chart, and I'm not even exaggerating that. So hopefully this thing falls hard so that things just become affordable. Because that is freaking ridiculous.
Yeah, well, I don't know if that's going to happen. And JTD saying to us, keep finding them gems like Q. Let's take a quick look at Q. It's Canadian cannabis stocks. They ain't having such a good day. Oh boy, what's going on there? That's not so hot.
What are you looking at? What are you looking at?
Oh, sorry, I forgot to share my screen. Apologies, guys.
Yeah, let's go back to cannabis. You're saying, oh boy, and I gotta see what's going. Holy!
Look at that. Look at red.
You know the interesting thing about Aurora? When was the last time they even put out news?
Well, what's the point?
We are closing more facilities.
Hey, look at Ayurcan screen.
They announced an advisory board this morning. I didn't cover it because I think most people know my stance on advisory boards, but they did have some decent names on there.
Yeah, we had them on the show. I was in their office not that long ago, and I was actually pretty surprised. They had a lot of people working there, and it seemed like a pretty efficient operation. That's not a buy or sell recommendation. Just I walked away more impressed than I honestly expected. What was I looking for? Canadian
QU, probably Canadian microcap. Oh, right there, actually.
TGH is having a good day. That's Tornado Hydro.
What's the red thing beside QU there for you?
I don't know. News?
Maybe.
You tell us, JTD. You're the expert.
42.5, good day.
Yeah. You can see a lot of these names are just getting are pretty red here, except for EGT.
A lot of tech names today were getting just annihilated.
Mm-hmm.
Oh, there you go. You can flag the stock just so it stands out on your watch list.
Oh,
well, thank you, JTD.
So I had a flag on it. Oh, got it. Interesting.
I think
I'm gonna pull up the NCU chart just because
such a good guy.
JTD keeps bringing it up. I don't know, JTD. This chart ain't looking so hot.
Mr. Rahul on well, that's doing not bad depending on when you bought in. If you bought in October, call it, you're doing pretty good.
Mhm. Okay, well, look, let's wrap it up here.
One thing I will say is it looks like cloud computing tech is getting smashed. Mr. Rahul on Twitter, who I believe used to be Matt Babiak, highlighted this morning just some ugly red out there. Names, crowd. What is that? Crowd strike. That's down 7%, 8%. Whatever FSLY is down 25%.
I'll pull this up. This is a shout out to Matt Babiak, the biggest fan I know of Sunny in Philadelphia and wrestling. I've never met Matt, but like he sounds like the kind of guy that all of my high school friends would love to hang out with. Just like
yeah, I agree.
they're all into Sunny in Philadelphia and wrestling. Two things that I'm not really a huge fan of, and part of the reason that we've drifted apart. I wish that my friends cared as much about stocks as Mr. Rahul does. But crowds, yeah. Look, it's a pretty red day in the market.
So what's causing the red? Do we know that? Have you seen anything on CNBC or BNN or anything?
I don't know. I was driving around all morning, trying to get my kids to take a nap. But
well, I'm gonna have to back charge you for that.
Yeah. Okay. Well, look. Let's wrap it up here. What's going on at the dive
So
today?
this afternoon on the dive, we have I believe it's the CEO of Copper Bank Resources on. I'm going to butcher the name, and that's why I kind of try to avoid it. Gianni Kovacevic. Something along those lines. I apologize. I know I'm saying it wrong. I'm terrible with most names. He is on to talk the topic of copper on the Daily Dive in half hour here. Oh, look at that. I didn't realize we had riffed for a full hour already. On top of that, I am so behind on drafts on analyst reports and some macro stuff that I've got some work cut out for me this afternoon and for this weekend. So we'll have a busy few days in terms of content.
Mm-hmm. Well,
no, JTD, I am not Italian.
What's in Saskatchewan? What's the primary background of everybody? I assume like WASPs.
You explained what WASP is to me at one point in time.
A white Anglo-Saxon Protestant. So a
lot of Germanic, Ukrainian, Polish, that kind of region.
This guy named Adam opened up a Polish food in Asia.
You have talked about this place at length to me, and I need to try it so bad.
And it's literally called Adam's Polish Food. And so if anybody's in the Durham region and they want to try out, but he's been closed. I had to drive out to Oshawa. Drove past Billy Madison's house, the house of Adelaide McLaughlin, to find another Polish restaurant because now I'm into Polish food.
So I actually told my wife you're out front of that house because I was on the phone with you when you drove out there, and her mind was blown. She loves the movie. So then, what was the story you had about it? Your sister's prom or something was there?
This goes years back, but I believe my sister said that they had their prom at the Adelaide McLaughlin house because it's like a historic house. This is the house of the founder of General Motors Canada, right? And that's where Billy Madison was filmed. And they had their prom there. And I believe, if memory serves me correctly, that they paid somebody to walk around in a penguin suit because
it's just amazing.
That movie was so popular with people from my generation that it was kind of cool to be live near that Billy Madison house, which a lot of the scenes were also filmed in Toronto as well.
I definitely thought that was Hollywood.
Yeah,
but
a legendary movie from our time. So let's wrap it up from there. Look, guys, you could spend your last hour staring at any screen, any place in the world, but you chose to spend it with us. Also, nothing we talk about on the show is a buy or sell recommendation. If you're looking for that sort of thing, go find somebody who is licensed. This is information and entertainment purposes only. We're talking about it off the cuff. Again, we get anything wrong, you can let us know in the comments. Big win for the Jays last night. Huge 8th inning. When we put up a 5 spot.
I have no idea what that even means, Steve.
Playing this afternoon. I think Ryu's pitching. You watch SmallCapSteve Live, you can get a little bit of Jays talk. Thanks for joining, everybody. We will be back tomorrow at noon. Going to try to make young Justin come on regularly on Fridays. So we'll see if his...
Don't we have Mitch Geisler tomorrow?
Yeah, but Justin can come on after. Okay. We just got to make sure that his mom will let him. Thanks for joining, everybody.